Hello and welcome to my channel. I am Robert and I discuss everything automated algorithmic trading or simply algo trading. Today is going to be a fun video where I follow up on some of my live trading, particularly with the channels volume combination that I've been using and talking about. We're not actually going to be using this chart here. So this part's not going to do us any good on the screen. Although it's interesting in terms of my grid trading, that's not what we're here for today. Today, we're going to actually talk about the real profits that I've achieved through the channel's algorithm coupled with a volume indicator. So let's get into the actual real numbers. The real results from my money account. Now, as you can see, we have already had one sale and a profit just right on the screen. But let's go further and see what else we see. You'll see a lot of the floating grid profits. Circling the wrong one. Providing I can stay on screen. There we go. Exactly where I expect them to be realistically. This is a stable, consistent profit basis I get every time from these trades. But we're getting sidetracked. Back to the good stuff. A little bit of volatility. Okay. Here is another profitable trade with the channel's volume moving average combination. But it does get better. Let's see if I can find the really good one. Okay, here we go. One single profit from the euro franc combination. Now this is roughly 3 trades that made this profit. So an average of $1 each per position, which is not bad really given the strategy. And we are going to look at that chart and multiple charts of the strategy. But this combination has done well. It can actually be better, and I'm going to show you a modification that will make it a little more strategic and tactical in the way it finds and hunts down opportunities. So let's get into TradingView and actually see this combination at work. Okay, we are now in TradingView looking at the combination. Let's zoom out a little bit. And we see the channels volume indicator. Let's display the channels. And you can see that this is pretty much a complicated mess on the screen if you don't know what you're looking for. But we see down here the volume indicator where purchases are based upon specific volume levels. We also see where channel indicators take place for certain purchases. And of course the take profit is a simple 20 pips. But let's get into this in detail and really look at this combination. So let's zoom in, and I'm going to hide the channels indicator for now so we can focus on just the take profit and deviation. So here we go with just the take profit and deviation. Red line is the deviation. Green line is the take profit. We have the purchase, the sell, the purchase, the sell. All total for the last 24 days, this strategy has done 11 trades. If you remember from the last video, I am now using a watch list to trade multiple targets at one time. And I am using a filter within Jackrabbit Relay to limit it to a spread and a maximum number of 2 different assets to mitigate my risk and to take trades based upon volatility within the market. But what if I wanted better trades? What if I wanted to be able to hone this down even more? Well, there's an easy way to do that. And in fact, I have a graph or a chart where I have done just that. Now we're going to hide the channels variable here. And you will see that the number of trades we've taken is about half of that in relation to the other chart I just displayed. So this chart is 11 trades. This chart is 6 trades. What changed? One function, really. Range filter. I applied range filter, and you can see here with the green-orange combinations of it being at work. The rest of the algorithm is exactly the same, but because of this filter, it has drastically reduced the number of possible trades to finding trades that are actually more tuned. So let's start looking through this and actually seeing if we can find a trade that really demonstrates that. Okay, here we go. This one trade shows a very quick entry and a very short holding period. And that really is the point of this particular technique. Adding range filter at its default settings has optimized this even more so that I get very sharp, very quick entries when they take place. There are a few occasions that I end up holding a position, but nowhere as frequent as the combination without range filter. So let's go through and see if we can find another trade, which we do, and again, very short amount of time. So that tends to be a pattern when you're adding range filter to this trading combination. But it does slow down the number of trades that you are going to take. Your trades are going to be drastically less. Is that good or bad? That's a difficult question to answer because you have to take into account your risk assessment. For my risk assessment, either one works well. I like having more trades for the original, but at the same time, I really like how quickly this can get in and out of a trade, because that opens up the opportunity for more volatile pair to take its place. I also like the fact that quite often this particular approach only has one position per trade, so there's less accumulation. Now, less accumulation does mean less profit, but it also means less risk. So that trade-off is there, and it's a good one in terms of the market. Here, we have two back-to-back positions, both profitable. And we can clearly see just how volatility can give this particular approach a clear opportunity that might not be present in the original strategy. So subtle changes can make quite a big difference in trading. And the real world volume assessment can have drastic implications on just such simple little changes. We may have half the trades, but we also have significantly less risk and significantly more opportunity for other trades to be bought and sold in profit. When you're looking at your options, these are just some of the tiny details that really take shape in your trading. I may end up switching over to this strategy with my real money account. But overall, as you can see from the chart, it is quite illuminating. And it doesn't take very much accumulation at all. In fact, in going through the differences between the two charts, so far, I've only found this particular strategy to have 2 or 3 positions compared to the other one easily going up to 5 depending upon market condition. So that is something that is also a consideration in trading. The ability to really thoughtfully reduce the number of trades. By reducing the number of trades, I've in essence gained the ability to trade more if I want in the same amount of money, because I will have less exposure per trade if I allow only 3 positions versus 5 positions. So let's go and find a different strategy. Let's go to one of the ones that I sold off. Okay, here is the Euro franc. I sold this off this morning. That was one of the profits I just demonstrated. We can see that it did pretty well, but it's a bit of a longer term holding pattern than what I might really want. So let's see how this pair handles the addition of the range filter. See if it makes a difference. And we can see drastically it does. Here we can see it only made 1 trade. It eliminated the other 4 trades. But it only had 1 position in that trade. So significantly less risk involved. The consequences to that are that less trades is less profitability. So by itself, it's going to be less profitable trading with range filter than it is without range filter. But range filter reduces risk. Range filter also allows for trades to transfer quicker from profit or loss, and allowing me to take advantage of market volatility where I can get into another pair quicker by not holding. For example, if we see this chart, we can see the position, how long it was actually open. It actually stayed open quite a bit of time. Now let's go find the one trade on the range filter chart and see how long it stayed open. Okay, as we continue searching the chart for our one elusive trade. And here we go. Our one elusive trade. This is it. Now I'm still using wick only as my selling point. And as we can see, this got out with the wick. And it did quite a nice job. Not that long of a holding period compared to without range filter. Is it worth the difference? The risk level here brought me $3 of profit, meaning the risk level without using range filter. The risk level with using range filter only brought me $1 of profit. So what we can see is that by trading Euro franc, each position of accumulation is going to equal roughly $1 in profitability. So having only one position is going to reduce my profitability as a direct correlation. But it drastically reduces my risks. One position will only be 1% of my account, whereas 3 positions is going to be 3% of my account. So you have a direct correlation of risk to profitability, a direct correlation of positions to risk. So by examining these details, you are able to carefully look at your own personal situation and circumstances and truly see exactly how you can benefit from a trading metric. So let's go and find another pair that I trade frequently and see how well it has done. Okay, in looking at the trading without range filter, we have 8 total trade cycles. And we can see a maximum number of purchases of 4 positions. So with that being said, with range filter, we have 5 total trade cycles with a maximum number of purchases of 2. So we have a drastic and direct reduction of profit, albeit a drastic and direct reduction of risk. What works best for your personal circumstance? That must always be the first question you ask. How much risk can I afford to take? How much money can I afford to have on the table at one time? The idea of drawdown, the idea of going from the highest to the lowest, or from the peak to the valley, is just not a good way of measuring your risk. Your best way to measure your risk is to measure your maximum number of positions per cycle. In this case, 2% of my account for this trade. That's my worst case scenario here. This with range filter. Without range filter, my account has 4% on the table at one time for this same pair. You can quickly see how that can be a problem if you don't think about your worst case scenario plan ahead of time. You can also see how that can be a problem if it goes into a stop loss. The difference of a stop loss of 2% versus the difference of a stop loss of 5% is quite drastic. So you always want to look at all of the information as much as possible. Let's see how long it stays in a position. Okay, this is without range filter, and we have a pretty small duration right here. Nice and simple. That isn't always the case, but let's keep looking. Okay, here we go. We have a position, and it held for a good length of time. Not an overly excessive amount of time, but it's still a consideration that you have to be aware of for market exposure. Let's keep going. Here is a position that had 2 purchases. So with an average of $1 per profit, this particular trade made a $2 profit. Not bad. Let's see what the next one brings. The next one brings only 1 trade. So roughly $1. Nice, generous, and healthy profit. Here is another $2 trade cycle. Again, reasonable and profitable. Another simple $1 trade cycle. So you should be seeing the differences here between the trading. Every pair has its own uniqueness. And in the process, we can see, like this particular one on the screen, the holding period is significantly longer than every other period we've seen yet for the same pair. Remember, concentrate on the exposure. The exposure of how long you're holding the trade is the most important aspect about deciding your risk. This particular trade had 4 positions before it finally sold into profit. 4 positions is $4 as a rough average. But that could have easily gone the other way, and it could have turned into a loss. Now let's look at the chart for range filter. And let's go find a trade on range filter. And here we go. We see the entire trade on the screen. One single trade. Not bad, nice, simple, a clean trade. Something that should be really a nice addition. And it is. Let's go find another one. Right here, another trade. Nice tight trade. Again, not very long, very easy. Well done placement of only 1 position. Here's a really nice trade. Nice and short. And yet, one that is obscenely short. I'm going to have to zoom this one in to actually see it. Literally only a few candles long. These are the kind of trades that everybody loves to see. Get in, get out, done. Nice, simple, sweet profitability. So range filter in this context has done an exceptional job of cleaning out unnecessary trades. Okay, so let's go back and actually we found it. Okay, here we go, a trade that has multiple positions, even with range filter. 2 positions, not bad and well done. So a $2 profit on this trade cycle. And it's not that long of a holding period. So for 5 positions, 4 of them with 1 position each, or a 4% profit, and then the 2 position for 7 total percent of the month. Not bad. 7% profit for what would be roughly 1 month worth of trading. That is with range filter. Now, if we take the face value without range filter, and we look at what it did. As soon as I get to the end, it did 8 trades. Well, 8 trades with an average of 2 positions per trade cycle. You're looking at roughly 16% profit per month. So you have 7% lower risk, 16% higher risk. That is your question. Which best suits your level of risk? I personally like having the 16% profit as a rough average versus the 7%. But there are cases where that might be different. Nonetheless, looking at this in such a way, breaking down and really analyzing risk versus reward, you can clearly see how you can come up with a strategy that trades exceptionally well using a watch list and provides opportunity based upon volatility. Because the more volatile a pair is going to be, the more likely it's going to trigger a purchase. Once it triggers a purchase, then you're in the game, money on the table. Having a risk assessment plan of only 2 positions open at once means I can take advantage of this with a slightly higher risk by not using range filter. But if I see changes in the market, then I can quickly adapt and change my strategy if I feel I need to. And I already know range filter does an exceptional job with this strategy and gives some really good entry points. So let me know what you think. How do you check the market for situations? How do you balance out what strategy you want to use? How do you weigh out your risks versus your reward? Share your thoughts below in the comments. Let me know how you trade these kinds of situations. Now, all of these indicators are part of my Jackrabbit TV premium system. The link to Patreon will be in the description below, and that is what covers all of this. If you want to use Jackrabbit TV, subscribe below to my Patreon and I'll get this set up. This helps continue my research and funding so that I can continue to look at all of these little different techniques and strategies and test them. Let me know what you think. Share your thoughts. Thank you for watching, and until next time.